Well, welcome, punters, dribblers, traders, and investors, to another Traders Community podcast. A very, very, very choppy, volatile day. The theme today is Happy Valentine's Day. Enjoy your chicken Kiev. Well, false reports, mocking reports, all this came out today and created a lot of volatility in the markets. I've got Meta Johnny here before he flies off to his vacation down in Mexico, practicing his Spanish as we speak. We have the great Madavi here to share his wisdom. So today, we gapped down overnight, I should say. We were way down on all the equity markets. That then ran off when there was comments out of ministers out of Russia and Putin to come all the way back to almost break even. In fact, I think it got positive. Then through the day, we had varying reports out of the Ukraine. One of them was the Prime Minister, and what was a mocking tone was then taken as a real tone by the news reports, where it was responding to a Facebook post that, hey, I guess we're getting attacked, or we're getting attacked on February 16. Words to that effect, because of course that is what the US said last week. The view is, with Ukraine, as you've seen, the official view is that the US has it all wrong. And the view through that region is that the US is promoting almost like they want a war, cajoling, as we said, Putin on, which is interesting. We do know there's build-up. We do know there's tanks going through there. We do have some good sources on the ground in the Ukraine, that part of Russia, and, as you know, through the Baltics and Scandi. So, there's a lot of that going on, and that's moving the markets very volatile. Personally, as I've said before, when it gets like that, pull your head in. Don't do a lot of trades. We mentioned on Twitter, there's a lot of this angst all the time of buying dips, selling rips, telling people to do this, not to do that. Be very careful of who you're following and listening to. This is not the first roundabout for many of us. We've seen this on many things. So be aware of what's going on. It's also a time of great opportunity. All right. So but you got to be like a cobra, almost. Wait for your opportunity and take it. So as we can see quickly there, oil, another strong day, $95. Natural gas rebounded from those lows on weather models, and we know what we said on the SPOO. So let's quickly have a look at the S&P. What we did on the S&P, and it needs a follow-ups from all the charts that we do on our weekly report. And thanks for the feedback on that. It's very welcome, and it lets us know, because a lot of work goes into these things. What's relevant and what's not. We know what we look at, but if no one's looking at it, there's not a lot of point, right? So we look at all that sort of situation. The most important thing is the overall trend. So you can have a strategy. Even more so when you have this volatility. Remember I mentioned about taking opportunity. So the opportunity comes about on some of these breaks. They get oversold, overbought. Options can get very thin. And be aware, though, you still got to get out of it. So, and don't fall in love with anything. Watch it. Be very observant to, we just spoke at the top of the podcast, I don't even know if you call it fake news. It's news that's just incorrect, but not intentionally, I think, for the most part. Okay, on the S&P on the daily, we dropped out of that channel we were talking about, and we came back to test it. We closed, this is on the cash index, we closed right around 4,400, which is a big OI level. On the weekly, you can see we're quite a ways above that level. So that channel there is all the way down here at 43.20, clouds below it. And you can see through the day. So as far as the way I traded this was I took the bounce when all this sort of nonsense and made a little bit. When this nonsense happened, I was very wary, as we said. And since then, we kind of changed our... because you got to trade what's in front of you and at the market, right? And we've all seen these, and a lot of these... and it's very helpful to be able to trade commodities, currencies, and indexes. They trade very similar at different times. So take that knowledge and use it. So here we are in the 4 hour. Let's drum this 3 hour down up to, say, 15 minutes. So this is the stuff. Look, you can make a lot of money on this, but you can also lose a lot. So you trade accordingly. Remember, you trade defensively. So this is the move I'm talking about. Here we go. My bad. Okay, so this is what's happened all overnight. You've come in and you see all this. And so we kept having these, and these are gappier than what they look. These are very fast. So important to not hesitate. So look, here we got a pretty easy one. It broke up here. So when you're here, you know it's doing work around here. So at this point, you're probably even a little bit long to flat because of that previous add-ins 08, right? But look at these wicks. These are big wicks. So trade smaller size accordingly, or you swing, use optionality, okay? You can see when you look longer term, these are also, they're very violent, which as Madavi said before, is akin to a bear market. And the only other time is when it's a major continuation pattern developing. I mean, for that volatility begets volatility. And a lot of people are commenting about massive optionality in futures. Well, the market's bigger than it's ever been and more sophisticated than it's ever been, at least in the sense of having derivative products available to them. So some of it is speculation. But as you know, if we take the dribbler end of the curve, that's pretty well all about just buying, right? Looking for buy. You can see the way it reacts, and fair enough, it's being conditioned by a bull market. And so that's the sort of thing we try to advise to get over. Now, as far as people talk about the punter or the gambler, the fast money, however you want to took it. So they're tend to follow momentum and combine with fear of missing out, right? So the investor's going to be a big user of these tools if he's at a good shot or knowledgeable. So nothing's blanket. You don't really know what other people are doing, but I've really been impressed with some level of maturity and sophistication very quickly with some people that come from the trading world or are new to it, that have developed it and that sort of thing. I'm very, very wary. The more I get on things like Twitter and just see constant barraging of other people, I mean, it's kind of BS. And if it makes you feel good, well, just, I don't know what to say at this point. But I think you get the gist. So there we have that. Look at those things. We're going to bring Madavi in now. He's just trading. You probably, the news just came out like Tower Semiconductor has a takeover on the table from Intel.
How you doing?
Good, thanks, mate. Do you want to? Well, run us by that takeover real quick.
Well, I just seen this thing going by TSEM. I seen it running up Intel 6 billion share buyout. I bought some at 48 and seeing what happens.
Yeah. So I see that went out at $33 or so. I mean, came down, I guess, with everything else. So we'll see. It's a 6 billion deal, was it, or 8 billion? It's a big deal there. So yeah, so that's holded right now.
It's open back up.
Oh, it has? Where's it? This isn't showing it on this one. Maybe
I don't know, did it open again? It will just open.
I'm on a daily chart. I probably got to go
Yeah,
to it.
it's open.
There we go. Yeah, I see it, bro. So 49.58. Yeah, I was thinking, what the heck? 33. So yeah, that was a good one. You got that night. Well, it was hard to hold it as soon as you came out, but you're up a little bit, I see.
We got halted and then went down.
Yeah,
So,
yeah. It's up a bit now. 49.62.
Yeah, see if I can make a little bit of turn this into a cake.
So what was it? So there was another takeover on the weekend, but it was neglected. It was counted as unacceptable. That was Cisco buying Splunk. SPLK. That's one that we traded a little bit. You'd call that a dribbler special, probably, right? Coupled with a little bit of punter special is kind of your market. But there are some. It's one that it was difficult to trade. I remember trading it. It was very gappy. That's why we put them in those categories. FYI, it's not to be derogatory or anything. It's to describe the market thing and the opportunity. Investors, that was a hot one, but I think they started missing, didn't they, Splunk? Or missing revenue growth, so they became not so hot anymore. So that's Tower, TSM. Let's look at the Nasdaq. That's what Madavi traded mainly today. So just quickly on that, you can see the same channel that we have on the S&P. But you can see on the weekly, it's almost at that major level. So these are critical levels for the Nasdaq if it gets under here. Otherwise, if it all gets same, it's more of the same. Okay, sorry, mate. Let's bring up a 5-minute chart for you. Bear with me one sec. I just realised it would help if I shared this screen with you that we're looking at. There we go. So there we go. So there's Nasdaq. That's a 30-minute. Let's bring it down to like 15 or 5 minutes. There we go.
I got a good position on.
No, I know.
Okay, we're on air. Johnny. So here is the Meta's right in between Cartel and the Meta right now. So anyway, here we are. So this was just like, actually, wow, this is even worse than the spoos. So as I mentioned earlier, I kind of, once this sort of, I had this little one and the equivalent on the spoos, then it came flying down. You end up making not much for the risk, right? So then I pulled out. We did a little bit here. So a lot of this was just news reports, right? And a lot of them were since disseminated as being false or misinterpreted. So anyway, if you want to go ahead, Madame, here's the spoos. Anything good to say about it? Not the spoos, the Qs.
It was a really crappy day. I was just all day long. I was getting way behind, coming back, and then getting way behind at the end. Just didn't. There was no follow through, big gaps and big movements. Like there was no volume. You just didn't have a really good day. That's why I'm sitting here trying to trade in the aftermarket, try to make a little bit of money.
Yeah, I mean, there's lots of air pockets today.
I should have quit one off the head. I was just about to, and I got my last trade that did me in.
And actually, I remembered I had that lucky trade. Remember, I got hit on the bid on some puts where I had the money on Apple, and then came back and went, how that happened? And one of those I guess it was one of the Ukraine things anyway, came out, and then I got out and thought, damn, I got out too early. Then the other one comes out where the guy then they realised the guy was actually being sarcastic and making a joke. It was a crazy day. So it doesn't happen very often, punters.
Unfortunately, I didn't get that today. I got bailed out this morning on that, but I didn't get it a second time.
Yeah, a bailout's a good way to describe it, really.
You know.
There we
So
go. So yeah, and so on the weekly you got that. So when it gets nutty like that, Ed Sekoda, I think was who I'm trying to remember, but I'm pretty sure what I learned off was you scale and reduce your size. So basically you always have your your normal size, right? And so you pyramid in when you're really doing well, i.e. pyramid as it goes up or down and you're in the right way. And when it's not, you just reduce your position. So I'd done that by about 10 o'clock this morning already, I think, you know. Choppy. And so again, the Russell is just still not really a good trader right now. And I'm trying to work out, it looks to me like the market makers or hedge fund are still unloading stock, and the dribbler, there's a lot of dribble specials in there, are buying to average down. That's what it looks like, because if you just look at the pattern of it. Actually, there was one good trade I did today. Sorry, I forgot about it. Weber. So here's the other thing you can take advantage of, right? So Weber had earnings, got sold off a couple of dollars, 10 to 8. Then we just noticed it ripping up again. Just it came on a high low. And you're able to short it. Actually, you couldn't short it at one place, right? And then it fell maybe 50 cents, something like that. I can bring that up, actually. That's rather than... So, is this correct on Weber? $50? I mean, sorry, Towers trading up at $50. Smadavi's play there.
yeah.
Nice call, mate.
I'm still writing it. I want to see if this will give me this $2 only or $10. I'm hoping for a 10. I need it.
I should have bought that with you. I flipped out of the execution system so I could do this on this computer. I didn't want to have anything in the way. Then that, just as I did that came out.
Sometimes you got to go for the miracle trades, you know?
Oh, that's what we're not teaching them that, are we? So what's Weber's symbol again? Cook, isn't it? No, that's Traeger. What the heck was it? I've just logged out. What's WBR maybe? Nope. Yeah, I was right, sort of. Okay, so anyway, here's a good way sometimes to give an idea what we see and what we do. So you're always looking for your edge. So as I say, you stick to what you know. One of the other things we know is watching reactions. But something that, so we know these stocks, as long as it's totally unknown. We traded it when it had a float. We actually did really good on Traeger, which is symbol Cook, which we had on the IPO. And so we've traded Weber a few times in sympathy. So we kind of know them a little bit. What we noticed was they had earnings this morning. The market didn't even see it's thin as or heck. It got sold off. We noticed this massive volume spike, and then we moved on to futures. So we actually missed all this initially. Where then it come around again on this bounce, and we sold it down. We got this 50 cents or so here. And then it rallied up there. So all we really made out of this was purely a volatility scalp. And we see how it came down to the cloud. Just real easy stuff. I mean, 10 was a big optionality. So you can probably, perhaps what happened here was would have been a lot of calls sold at 10. Work done there to rewrite the position by market makers. I haven't even looked at the open interest or the optionality. I'm just surmising that's a possibility. Okay, the other thing we want to talk about was gold and silver. So remember, we've been saying for a while here that gold has to do something.
The stock's still looking good, by the way, mate. Just want to let you know.
The TSEM?
Yeah.
Nice. Yeah, I'll bring that up in one sec. So we've been watching this weekly on gold for a long time, and as you know, Madavi's been a big physical buyer of this on these lows down here. We've been talking about it. So the last time it was up here, which was last week, I believe, looking at this chart, I felt like a few weeks ago, but we rejected. No, this is a weekly chart. It looks like about $20. Anyway, we have closed over this and traded over it today. So gold itself was the highest level, as you can see, since all the way back here. But we're broken out of this pennant. If this pennant has power, that means that's a continuation of all this. So if we were to shrink that, so if you want to, let's look at this. So this is, there we go, going right back to 2015. We had this massive rally. I guess that's the COVID rally, right? When everyone was just buying everything. Remember, gold hasn't performed, so you probably got a lot of people shorted. And our friend Vince, who I mentioned today, he knows gold. Like, he's a really good gold trader and analyst, been around, knows it. So he's been talking to too. So anyway, so this is a flagpole of all this. In other words, 3, 4, 1, 2. This has substantial upside. If it fails, we got more work to do. But this is what we've been watching. It's a weekly chart. So very significant. And let me just, what did we write on gold? Where was the actual settle? So it actually settled up $23 at $18.73. So it's a little bit under settle right now. But it got up to $18.74. That was the highest since this November the 16th that we're looking at here. So you can see pretty clear where the next resistance is. Okay, let's have a look at silver. Has been doing similar stuff. I'm still getting used to this, if you haven't noticed. So silver, those lagging gold, it came down steeper, much further. This is the high looks here was over 30, right? It came all the way down to 20, so lost a lot more of its value. And we haven't got over this triangle. I mean, this isn't as perfect as gold, but you can see it's got much heavier resistance with the cloud. If we go back to gold, you can see we're actually over the cloud. You can see the difference there. You can see it just here, right? So that's what we wanted to show in gold and silver. I did also notice that Barrick Gold, which is symbol gold after they merged with Gold Corp. I can't remember who took over who. I'm assuming Barrick took over them. They have earnings this week. So that's probably going to be a hot topic, particularly if gold up in there. So keep an eye on that. Bitcoin itself, is Meta in the house? So Meta, gold, the crypto's kind of been hanging in there. Remember off the weekly? We got this big support here. It's as I said, the most speculative vehicle of the lot. But it's actually, and it had been trading with Nasdaq, but it's holding pretty decent, really. Right? In comparison. It's holding 29.42 on Ethereum, 42,673 trades. That is like 3,000 off here, but look where it come from. That's the other thing you got to look at. Off that thing right there at 31.8. So, I mean, that's two to. I think Johnny's tied up right now. But any comments on it? I have seen a little bit out about those NFTs, where over in England, the equivalent of the IRS, I'm not sure what they're called, but the tax authorities have grabbed 2 of them or something. I didn't read too much of that article. As far as advances decliners, it was a much better than Friday. Still a big discrepancy on the NYSE 908 advances to December 23. Sorry, did I really just say that? Decliners 23.16. And the NAS 13 decliners versus that number doesn't look right. 3,007, I think. But so I'll go revise that before it gets published. But as far as the stock market, much the same as Friday, except just different components. The S&P 9 and 11 were down. Noticeable energy was down. And I think a lot of that's just profit taking because there's some big names having earnings this week. Devon's that's been one of the real hot ones that reports this week. So probably more of that than anything. I mean, people are going, how the heck is that down when oil and gas are up? Well, they're different. One's properties, they get ahead of themselves, that are stocks. The other two properties are futures, right? So it's all relevant to their hedge, production. Is this just a reactionary move? People just want to take profit. As far as earnings go, right, remember Exxon beat and they were up on it. Chevron missed and they fell on that, like maybe 4 or 5%. I'm trying to think. It's a few weeks ago. It's on the site there somewhere because their production was lower. So that, you know, in these kind of volatilities, it's good to take some money off the market. You just never know in something that's really extended. Does it keep exploding? Does it pull back? And you have other vehicles. When VIX is this high, for example, it's pretty hard to buy paper, right, for protection. And so a lot of people tend to sell optionalities if you're long calls, if you're short sell puts. You just got to be aware of that risk when you're managing it. So keep an eye on that, and if you know how to do it. If not, make sure you find out beforehand and do all the requisite study. So we went through Natty. Natty's up. Let's have a look at some Natty charts. Actually, let's check visit. Where did we put that? So that's Weber. Let's go back to TSEM and see how that's doing. So yeah, flitting around $50. So that's probably the area. I wouldn't imagine there'd be any optionality up here, given it was 30. So it's probably just all stock action. There could be people caught short, obviously. So a lot of these sideways stocks, and you've got to be careful when you sell options, particularly naked. If it's a takeover opportunity, so remember, these takeovers didn't just get made up yesterday. They've been probably thinking about these for quite a while, a lot of these companies. So we had Cisco and Intel, two big old cumbersome companies, back to back of takeover. I would be very surprised if that was worked out, over the Super Bowl party or something. As far as Ark of the Covenant stocks, Cathy Woods, they're all down today, but not significantly. The most down was ARKG, down nearly 2%. And if you remember, you probably saw Moderna and a lot of those stocks getting crushed today. So not much else really to cover, I don't think. I think copper was down a little bit. Apple, let's take a quick... Well, let's do oil first. Yeah, good point. So if we look at oil here, you can see it's very much into this, what we've been talking about, right? This weekly uptrend, hang around the median line, but this is that weekly we've been watching, and it managed to close right at it. If it gets much above here, and so also from a short point of view, watch for any spit down. Now when we've got every Tom, Dick, and Harry calling for $100 oil, I think you know the game on that. The same people calling down here was never going to bounce again, right? So we got our weekly channel, very important to watch. So a lot more room on the daily. If we look at the 5-minute, I just want to show you this or recalc, but look at how volatile this is. This is oil of old, and you can see as it gets closer to 100, these moves are more meaningful, so it attracts different punters to the table, right? Not just your typical trader. So it'll bring people in just looking for speculation, which happens a lot in commodities, which gives opportunity if you're a trader and you're familiar with it. So again, these are things that are very violent, and if you're familiar with a dribbler technique of just buying and holding because everything goes up, these are not the markets for that. Johnny Hindsight, of course, or paper traders, But these are big, big moves, and Natty even more so when we get to that. They're dramatic moves and they're big points. So where we closed was right at that previous high, false break. So remember, that's one of your easier trades. And it's working very well with Ichimoku and with Murray. Perfect, actually. So your bigger trends, know them. We know the waves. Count your ABCs, your 3-wave things for pullback. Look, 1, 2, 3. If you buy here, you know where you're wrong. Look for other levels. I always look for about 3 things to confirm it. So an Ichimoku, the pattern, the Murray, you're using all this. So the reason we use technical analysis is to keep you disciplined. It's not to ignore fundamentals. You know them, but what you want to watch is sentiment, how the herd is reacting, right? And that's why we categorize each one of those, the punter, the dribbler, the trader, and investor, all have different sentiments, all different reactions, and different biases, right? So pretty clear. And a lot of them, and so the dribbler then diverses into different categories where they're just always talking their book, or always running other people down, or just making up stories, or just new to the game, so they're not quite, and they're easily influenced. The punter speaks for itself. The trader, remember, different levels of trading. An investor obviously is a time horizon. So yeah, hopefully that answers that question there. So there we have oil. Let's look at Natty real quick. Now this was a throwover, to quote Bob Prechter. I think that's where I always got that term from. So if this channel's correct, it's saying this was a false break, right? And then we're back inside it. We got back inside the cloud. So this was technically a very difficult one if you're trading on a weekly basis. And on a daily basis, same thing. So in other words, it gapped, right? So this gapped up. Partially, part of the gap was because of oil, Ukraine, a flow on, and the other one was the change in the models. Okay, so if we look at 3 minutes, you can see what it did today. It got way up there and actually gave a really good short, right? So these are big movements on natural gas. So you got to size exactly, and as I said, I've said 100 times, if you're not from that world, I don't advise it, because yes, you can miss some opportunity, but geez, you can get destroyed on this thing. And there's a lot of commodities like that, palladium, lumber, all these things are thin and violent. This one, and that is another level because it's trading off weather, and anyone that knows weather, it's pretty hard to predict, amongst other factors, right? Optionality and stuff like that. So pretty clear. Interesting on daily and weekly, that curve right there. And lastly but not least, we know today, and there's a good article on Traders Community, that Bullard was on CNBC this morning, and obviously a lot of people were hoping he's being walked back. They thought, because there's a feeling out there that they walked it back on Friday. I'm trying to think who they were. Carey, I think. But anyways, a few of them said, oh, no, we just need 0.25%. End of the day, and they all say, oh, we're going to defer to power. So there's a thought that they just send this out there to test the market. Well, Bullard's always like this, and that's what's good in this article, is it mentions and it shows what he said back in November. So this is not new. Right? People keep telling me this shit's new. It isn't new. It's like the Fed minutes in January were not new from the Fed in December. Now, we have another minutes coming out this week as well, and there's a list on the weekly, and actually it's going to be in this. We'll put it on this page too, and it's all the YouTubers linked to it. These are minutes of the last meeting. So think what was said at the last meeting. Go through it and go what's happened since and how they can affect since. That's what happens. The one at Christmas was all to do with them ramming up for the bonus issue at the end of the year. I wasn't joking about that. That stuff happens. And I did mention on Friday that there's going to be chaos in the energy markets, or just the markets, after the Super Bowl. A lot of big money, a lot of money on the drink, get excited. That was a pretty exciting Super Bowl, right? So everyone's pumped and hyped. And see, these are sort of things that affect traders as well. It's not always rational, particularly when people are throwing around big money and big egos. So all that sort of thing's in the mix of everything too. Anyway, this is all about it. You can see what he's saying and how he plans. He's obviously... And look, we can opinion all we want about the supply. We all know, and Powell and others have made it very clear that the supply issues they can't control, but there are other issues as well. So if you just think, as I've said 100 times, if you are a central banker and you have incompetent, at best, government officials or playing some other agenda, redirecting, how do you deal with that? Do you almost got to force the issue, or do you keep going along with it? Because yes, you can't fix the cycle, but perhaps you can send a message that we're just not going to do whatever you want. We've got to also look after the whole 100% of the country, not just after politicians or in a partisan world. So all that's going into that thinking as well. These people aren't stupid. Also, I'll give you a little tip. Go look at Powell's resume and look where he used to work. Okay. So anyway, there's the yields. You can see where it finished up. One night it's flitting around this 2%. Okay, on the 10-year. So you've got safe haven buying, which we saw in gold, which we saw in bonds, versus, we're talking about the yields on, inflation. And we have the COT report this week as well. I'm sorry, Madab. Are you about to chime in, mate? Did I cut you off there? Let's have a look at that real quick. Yeah, so Tower is trading right on 50. So I'm guessing that's kind of the amount that they think it's worth, or other bidders. Not sure if Madab is trading pretty active right now. Not sure if he's here with us. So we look at that. We covered that. What else do we have, punters? There was something. So let's just go through the Fed real quick. This is on your report. But so we got Bullard today, we already had. Right? I don't see anything out as far as Tuesday. We have the minutes on Wednesday. We have Mester on Thursday. And on Friday, we get a bunch of them. Evans, Waller, and Brainard. Brainard's going to be talking about the central bank digital currency. So Johnny will be watching that one. And we know her stance on it. We know the paper. So we know we're moving with that. So Bullard is on again on Thursday, the day after the minutes. So remember, these guys come out after the minutes, often to soothe to the markets and explain. I mean... So traders keep thinking that, or I wouldn't say traders think that, but more your dribbler fraternity. And they've made it pretty clear that the market isn't their main thing. In saying that, when it becomes important, and Bernanke was the one that kind of focused on this, and they've run with it ever since, is when it affects sentiment. Okay? So we had a really poor sentiment number out the other day, but it's easy to say it's because of the stock market. There's a lot of stuff going on that aren't making people happy. We got the Omicron, we got the mask, we got what's going in Canada. We're very close to that. The news. We have political issues, just non-stop sniping. Left, right. I mean, it's to the point of ridiculous. None of that makes people happy. Then we have inflation. So it's easy to say it's stock market, but as I've said, or question, I think on Friday, how much of that, given a lot of the 401k, was marked all the way back up, remember, those last 3 days. So, and again, it depends who they ask. Are they people that actually have stocks? Are they people that not? So, anyway, cut a long story short, that's what we're looking at. sentiment, if it affects sentiment. Tomorrow, we get more inflation numbers. We get the January PPI. Prior was 0.2. Core prior was 0.5. We also get the February Empire State Survey. Not really a mover. And at the end of the day, long-term tick flows. They're from December, so it's over a month old. But sometimes the bond market likes to have a look at these, and the currency market. Wednesday, we got the mortgages, retail sales. You want to be already thinking of these. We have more inflation numbers. We have import and export prices. So you get the theme, right? This week we have housing numbers out. And, of course, EIA numbers out on Wednesday for crude, and API numbers come out the night before. So just, unless there's a holiday, every Tuesday's API numbers after the close, 3:30 Central. Following day at 9:30 Central EI, and the day Wednesday. And the day after that, Thursday, is the natural gas numbers. So just, if you're not used to that, be used to that. They are relevant even to non-oil and gas traders right now. When oil and gas isn't the trade du jour, then obviously no one cares other than us silly buggers. Thursday we got more housing. Philly Fed may be of interest. So these Fed surveys that are coming out now, what the punters, particularly the bond guys, are looking at is the inflation surveys. And Friday we got existing homes. And we do have a bunch of earnings. I have them on the weekly report. So you can see, so there's lots of good stuff here. If there's other stuff you'd like added or stuff that just you think's irrelevant, let us know, because we don't know. We know what we trade, the level we trade. We're doing this to try and help the community and be better and relevant, Which brings me, actually, we came across, let me just find her. So new to us, someone who was following us and sent us something, Volatility Radar, and and that's his Twitter handle. But he's put together his own vol work, and it's pretty impressive. So I've retweeted a couple of times. So do yourself a favor if you're on Twitter and follow it. Really good stuff. All his own indicators, nice person and all that to interact with. And we like to support those that support each other, right? Okay, anything else from Madavi or Johnny? We haven't heard from Johnny.
I'm right here. I'm just reviewing this, the Intel takeover of that company. It looks like it's going to go through $6 billion from this.
Israeli. Oh, so they've accepted it, the tower?
Sounds like it. They're going to close next week. I don't know what that means.
Oh, wow, that is quick. So $50 I see it's trading at. Do you think that's about the fair value? Are you just going to take profit on it, or do you think someone else comes in? We haven't a video this week.
It's going to be around $50-something.
Yeah. I see it right at 50. Yeah.
So I don't think I get too much of an upside. Maybe if it goes down enough, I'll buy it a little bit, knowing that people is going to probably pump it back up.
Right. Anything you've seen?
2.5 of them.
Do you think there's anyone other than Intel that's going to be interested in this?
No, it seems like Intel is their man.
So and Intel's got money to go, and it's going to take a while for their plants and everything to catch up to the rest of the world. So they need new blood, so to speak, which I think you mentioned a few weeks ago. And one thing that's interesting talking about, I think we touched on this when we were talking about geopolitical stuff, but up in Canada, they've created, the Prime Minister there, Trudeau, has come out and invoked a law that has been used for 50 years. Essentially, it's been taken as a assault on his people.
Right.
The truckers, which isn't just about trucking and isn't about making it difficult. If you follow the course, it's about taking away people's rights, right? Sorry?
It's going to be 55-60.
Yeah, okay. Oh, so there's a fair bit of room in it.
Yeah, there's a fair bit of room.
I wonder, so here's one way to play this it's not going to probably be like this tomorrow, guys, because of vol. I'd imagine it'll be high. But if it's cheap, you can do an optionality on that too. I.e. buy where you think, and sell above it.
Deals like this, and the deal falls apart.
Yeah,
so,
and that's where you have a problem. But it sounds like it's been accepted. So what was the other one we talked about?
Now. I mean, but you never know. It's not closed until the check's in the bank, right?
Yeah. We've all been down there. The old checks in the mail comment.
So you guys are running out there.
I'm still waiting for some of them.
And then if something goes bad, don't come and say, hey, you sold me out.
Yeah. So know your risk, people. Know your risk. And there's plenty of these fall apart. I mean, I don't know enough about it. I don't know how big Tower CME is, but $6 billion, obviously they're pretty big.
It's a $3.6 billion company today, so they gave them a 6, almost twice what the market cap is. So that's a huge premium.
It is. So there may be, and they may already been pumped up, but you may also see other semis, now in the takeover sphere. And don't forget, there is the incentive from President Biden's pushing, I think it's pushed through now, isn't it? The semiconductor support bill.
So there's going to be consolidation because they're not going to be able to raise money as easy if the markets turn around and stuff. So, and since the companies are flush with cash right now, that's time to strike when it's hot, right?
Right. I mean, and so a lot of these companies, there's a good saying, pissed against the wall, their money on freaking buybacks at the top. Instead of doing things like this, either improving your supply lines, I mean, it gets a bit old just to blow the supply price when other people hold it, or using it to acquire competitors. What's smart, I mean, they've paid way over. 6 billion, what did you say it was? 3.2 yesterday. But that bill was probably worked out a while ago. So they, in their eyes, they're getting this cheaper than what they would have got it. Obviously at the height of the tech boom there. So.
Yeah. So I mean, it's good. I mean.
So I don't know if this is new, but Berkshire buys Activision Blizzard, cuts. So let me just read this to you. This is from Reuters. Just came through.
Did an old man from Nebraska buy it?
Yeah, so he bought Activision. It says. So they. This probably came out earlier when I was trading oil and stuff, but. So Berkshire Hathaway added 14.7 million shares of Activision, ahead of Microsoft's 68.7 billion deal to buy it. So we know Microsoft's got the bid in for them. So I guess so it's just a headline of what their positions are. I don't think they're saying that they knew. Mind you, Bill doesn't Warren Buffett give Gates a bunch of money? Anyway, it added to Chevron.
I think he got off his board or something after he found out little Bill was playing around with the little kids too.
I'll leave that one alone. So
the richest man in the world had to go raise money from Epstein.
Yeah, there's something suspect with that, just quietly.
Hey, you hear that? Hey, I went there just to see if you wanted to donate to my foundation. Hey, the richest guy in the world that says he needs money. Oh my God, what's the world coming to?
That's true. So hang on, let's just stay on track here for a sec. So Berkshire added to Chevron. I think this is for the end of June, doesn't really, December, sorry. Anyway, they reduced its position in Bristol Myers Squibb and Abbey V, and that was in their regulatory fiery listing holdings at the end of the year. This is probably, a lot of you people have probably seen this. I just saw it then. It's on Reuters. Someone shared it with me. So it says the sales and Buffett's 6-year drought in buying large companies have contributed to Berkshire boosting its cash holdings as of September 30, 2020 to a record $149 billion, despite buying 21.9 in buybacks. They got some money. So that's a lot of cash that someone like that has to spend.
But that's all Bill Gates' money. They didn't say he's going to give it all to him.
Yeah, but didn't you say he's not buddies with him anymore?
I don't know. Maybe not. If he found that he plays with little girls.
Okay, on that note, so let's have a quick overview of what we went through. Russell's spinning around 200, the IWM, the ETF, Spurs spinning around 4,400, crude just under $95, and Natty just under 420. So we're going out at pretty good levels. You know all your stuff tomorrow. Keep an eye on the reaction and keep an eye where you are. There's nothing wrong in markets like this that are really volatile and fast. Yes, if you're lucky, it can be a massive big up or breakdown. But if you don't have a good position, be wary. Don't try to average or you can really get creamed. But also, by that I mean, if you intend to buy 10 contracts and that's all you intended and it's going against you, don't buy 10, 10, 10. But if you normally have 10 and you're not sure and you buy 2 and it comes down for you by 2, I think you all know that mentality. So think like a market maker in these markets, like a quick crash course. In other words, you got a position. How do I get out of it? Is it value? Is it not? Right? Short or long? Does that make sense?
Don't be a hero.
Yeah, don't be a hero. And really don't look for other people. Understand what you're doing. Don't listen to all this verbiage of the same crap non-stop. Every second day, I really can't look at a lot of this stuff anymore, can we, Madar? It's like nuts. Same crap one day, next day. Bugger that. That's kind of why we do Traders Community.
It comes down to 1 year, next year, I'll look at the stock, but if I don't like it, I don't care what they do. They can go jump off it.
Well, that's it. Yeah, I don't mean so much that. I mean, like the constant sniping and all this. I'm bullish, bearish, bullish. Just trade it, invest it, know your value, know your risk, and know your levels.
Okay.
So that's it, everyone. I hope we made some sense out of nonsense. But thank you for support. If you like us, like it, subscribe, share.
Always be killing it.
And always be killing it. See you at the roundabout there. Bye now.
Take care.